ladies and gentlemen. Welcome to the exciting fireside chat at Propathon 2023. And we have a very interesting topic lined up for you. Why the next decade will belong to the residential real estate segment in India. So guys, India's real estate market is expected to grow to over $1 trillion by 2030, right? So that's just a mind-boggling pace of growth that we're expecting to see. Demand is going to outstrip supply by almost 2:1 in the high income group and by a similar margin in the middle income group as well. So in this session, we have the opportunity to learn from a market expert about all the factors that will lead to this stunning pace of growth. Coming to the expert, there's a saying that in every market, we have market makers and market participants. So in this session, we're very lucky to have with us a market maker, right? So these are the guys who are the movers and shakers in the Indian real estate industry. I'd like to introduce Mr. Vimal Jangla from WSB, Walton Street, Black Soil. Hi, Vimal. Good morning.
Hi. Good morning, Rahul. Good morning.
So Vimal is a consummate professional who has over 18 years of experience in the real estate industry. And he's a managing partner at WSB, which is Walton Street, Black Soil, formerly known as Walton Street, India. So he's been with the group for more than 14 years. And he's primarily responsible for fostering key relationships with developers and affiliates for the purpose of implementing their investment strategies. So prior to joining WSB, Mr. Jangla was a senior project manager with K. Raheja Corp. And he was responsible for developing townships, IT and SEZs, and also the Sandalwood residential developments. So Mr. Jangla holds an MBA Finance from ITM Business School and also a Master's in Construction Management and Bachelor's degree in Civil Engineering from University of Mumbai with honors. So like I said, you're very lucky to have Vimal, one of the market makers in the industry today. So thank you for taking the time again, Vimal, to join us for this session.
Thank you, Rahul, for your kind words and introduction.
Yeah. So we'd like to start off the session by giving us a brief introduction to WSB itself, how it came about, and how today it's one of the preeminent PE funds in the sector today.
Sure. Thanks, Rahul. Me and my two partners, Kaushik Desai and Vineet Prabhugaonkar, joined Walton Street Capital, which was the previous avatar of WSB in 2007-2008.
Right.
Wherein, private equity in real estate had been allowed under Press Note 2 in 2005.
Okay.
So a slew of private equity funds, largely based out of North America, wanted to chase Indian real estate purely as an equity instrument of investment from 2006 onwards.
Right.
And that is when we, all three of us, joined Walton Street Capital.
Okay.
And they had invested close to about $200 million, across 4 assets purely as equity.
Okay.
Obviously, 2008 and the GFC, that story didn't turn out too well for obvious reasons. So we actually had to sort of pivot and look at strategies of investing in real estate in India, which had appropriate downside protections associated with it. So in 2013, we actually started investing in structured debt through the FII under Walton Street Capital.
Okay.
And we basically used to invest on a deal-by-deal basis.
Okay.
Black Soil at that point in time was one of our investment partners who used to co-invest 5 to 10% in each of our transactions.
Okay.
And they, primarily used to invest in Mumbai, and we used to invest in the rest of India.
Okay.
So to say, only the larger cities.
Right.
But the relationship grew, and in 2018, after a good 5-year relationship, we co-sponsored our first fund together, which was called Walton Street Black Soil Real Estate Debt Fund 1. with a modest corpus of roughly about 350 odd crores,
Okay.
which was invested across 10 transactions and is doing exceedingly well.
Right.
Uh, Obviously, in 2020, after COVID, the world changed.
Yeah.
And, Walton Street, given the fact that it had large exposure across North America, which obviously wasn't doing, as well as it should have, given the COVID crisis, decided it wanted to exit India.
Okay.
So it actually, approached us, me and my partners, to figure out a way to buying the debt business out. Uh, Obviously, Blackstone at that point in time was a natural partner.
Yeah.
So the management at Walton Street India, which is me and my two partners, along with Black Soil, did a management buyout.
Okay.
In May of 2021.
Okay. Fantastic.
We, effectively bought over the debt business in India.
Right.
And in the 2 years since have been able to grow their business manifold.
Right.
We independently launched our second fund in June of 2021 and have managed to raise approximately about 700 crores so far.
Okay.
Under that fund.
Right.
And we continue to invest across mid-market debt strategy, of course, in the residential space.
Right. So, I just like to go back to sorry to interrupt you, but you mentioned that you guys started in 2008, right? So that must have been like a true trial by fire. So maybe you could share with the audience some of the learnings, that maybe one or two learnings that you came to your mind at that point of time, what you guys learned from that experience.
Sure. I think the biggest learnings that we had, from a pre-2007 investment was twofold. One is we actually took entitlement risk, in investing equity, which means we partnered with local developers at the land stage without any approvals in place. The way approvals and permits work in India it's a complicated process. And it is extremely time consuming. And to be honest, it is difficult to predict the amount of time it will take to get entitlements in India. Of course, things have changed a lot in the past decade, particularly past 2016. But at that point in time, it was a fairly complicated process.
Right.
Obviously, that was one significant learning for us. The other learning was downside protection. An equity investment doesn't essentially give you a lot of downside protection, because you make money if the project makes money. Right. And effectively, the interests are not aligned to the extent desired. So these were the two fundamental learnings. One is protection of capital from a downside risk standpoint, and entitlement risk. Those were the two biggest learnings which actually worked against the success of private equity in India, particularly in real estate. And those are the two issues which we addressed quite successfully in our debt strategy, which we began from 2013, whereby these are the two big risks which we didn't take. We did structure debt which allowed us downside protection from the standpoint of having a mortgage on the asset, hypothecation of cash flows and escrow account, share pledge, demand promissory notes, post-dated checks, etc. And we only invested in projects which had already received approvals and done a significant amount of sales, with huge focus on financial closure of construction in order to ensure that our downside is protected and our interests with the developer aligned completely.
Right. Fantastic. Yeah. Thanks for sharing that. I think, like you said, the initial round of private equity capital in the country perhaps did not see that much success due to these risk factors that you mentioned. But interesting learnings, Vimal. So thanks for sharing that. Now, coming back to the India growth story, right? So if you could touch upon the structural growth story in the country today as of 2023, and why should everyone in the country today who can afford to buy a home actually aspire to buy a home? What is the reason why they should you think that they should buy a home today?
Sure. I think you mentioned two things, aspiration and affordability.
Yeah.
I believe both are in our favor, particularly as far as, this decade is concerned.
Okay.
And I'll tell you why. I think the reason for owning a home is more compelling than ever. I'll just start with regulation. If you look at the macroeconomic regulation, which started in 2016, particularly with demonetization, the introduction of GST, the Benami Act, and the bankruptcy code are favorable factors which actually ensure transparency, and accountability as far as all stakeholders in the real estate spectrum are concerned.
Absolutely.
Right?
Yeah.
If you look at real estate, particularly the introduction of RERA has indeed been a game changer in terms of ensuring that only serious players remain in the business and the fly-by-night operators operate. And that's exactly what has happened. After 2016, the consolidation which happened in the sector, thanks to the introduction of RERA, has actually, has actually triggered the shift of real estate, which was essentially considered as an unorganized sector, unlike manufacturing, to an organized sector. And I think that's been a significant change, particularly from 2016 onwards. Now, if I look at it purely from a consumer angle, right, prices were effectively stagnant from 2016 onwards till about COVID, right? And if you look at inflation, real estate was actually giving negative returns as compared to inflation up until 2020. Right.
Yeah.
And that is why it was not gaining the kind of momentum or price appreciation or increase in velocity that it should have. Now, what happened post-COVID is that a combination of interest rates being at an all-time low, measured new launches by developers, and constrained supply led these fence sitters who were actually hoping either for a price correction or some incentive for them to buy a home. That trigger happened, post-COVID, and all these fence sitters came into the market and started transacting.
And it all came
that sort of led. Absolutely. So that led to the record absorption that we've seen, particularly in 2021 and 2022. Right. Even if you look at a typical mid-market home today, which is roughly about 60 to 70 lakhs, that falls, in the affordability parameter of a typical dual income household, which earns roughly about 20 to 24 lakhs per annum. So a 70 lakh ticket size within the 3 to 3.5 times annual household income, right, which is extremely affordable. Now that affordability, if you look at 2014, was 4.6 times. If you look at 2022, based on the numbers which were I think circulated by HDFC, it's roughly about 3.2 times. So it's the best time to own a home. Right. In this market.
Absolutely.
The other impact, the other aspect, which is very critical in owning a home is the availability of leverage, which is nothing but a home loan. So effectively for 50% equity, banks are willing to give you the remaining 85%. So if you look at a return on equity, right, even on a levered basis, right, you're able to, buy a home pretty comfortably based on both the affordability index and the sheer tenure of the loan, which allows you to pay this over 15 to 20 years. Right. Yeah. So I think all of these factors, come together on the real estate side in order to facilitate home buying at the consumer level. So, and if you look at it purely from a salary growth standpoint, the pace of urbanization in India, the fact that your median age of the population of India is roughly about 27, 28 years, right? They aspire to own a home.
Yeah, absolutely.
It's their ultimate, goal in life, and that sort of bodes very well for the growth of the residential real estate space in the coming decade, particularly as far as India is concerned.
Right. Would you also say that because of COVID, people desire to have some stability, and therefore they realize that the importance of having, a fixed roof over your head, like I said, it provides a certain degree of stability and security, right? So did that also have an impact on the psychological aspect of home buying? Would you say that?
I would think it was a contributing factor, but I think the youth of this country, particularly the end user driven market, is far too smart, and they seem to have taken a combination of both an emotional and a well thought out decision. And I believe the low interest rates at that point in time was definitely a trigger for them or those fence sitters to effectively come into the market, because I mean there's also the psychological aspect of them feeling that the home prices are at an all-time low, and it is a buyer's market. Right. So that also must have been a compelling factor for them to transact in the market.
Right. Absolutely. So let's look at the performance of the key residential markets where WSB has invested so far. So since you mentioned that primarily you were earlier only in Mumbai, but now you guys have spread your wings to the other major metros. I think Hyderabad, Bangalore. And so if you could just enlighten the audience as to what has been the performance in the various markets that WSB is present at this point of time, that would be useful.
So just a slight correction, Rahul. As far as Walton Street India was concerned, it was always present in all markets with very less exposure to Mumbai. And Black Soil, whose co-investing was primarily Mumbai. So it was a good combination. Right. So we always had presence all across the country from the very beginning since we started our debt journey. Of course, we consciously stayed away from markets like NCR. For obvious reasons, because we continue to believe there was a lot of speculation in this market. Obviously, the story has now changed, particularly in markets like Noida, which have become more end user driven and less speculative. See, we don't have a preference for any particular market, but we have a preference for micro markets. So we basically, obviously, we are present in 6 major cities. We have a mandate to invest in Mumbai, Pune, NCR, Hyderabad, Bangalore, and Chennai. Right. But we, being hardcore, real estate, guys, we kind of keep our focus on micro markets that do well within a particular market. So we don't have a choice for, markets per se. We'd like to invest in micro markets seem to be doing particularly well.
So among the micro markets, so what factors do you think specifically drive an attractive deal for you? So you mentioned micro markets. So you would look at, would it be like job creation, or would you look at like absorption? You'd look at, a combination of all of these things, or what would entice you guys to get the micro market?
It's a multitude of it's a multitude of factors. One is the availability of infrastructure. Infrastructure in terms of public transport, roads, etc. It's a combination of social infrastructure in the form of schools, retail, etc. It's distance of that particular micro market from the office belt. These are 3 important factors which sort of drive an investment decision or a preference for a particular micro market. We believe that from this particular location, the person will be able to reach his or her office in like 30 minutes. You have good that leads you there, or there's a good metro connection. It's got a popular school district, so that if the dual income household wants to expand their family, they would not have to look any further. So multitude of factors in any market determine this decision of in terms of which micro market or vis-a-vis the others.
Yeah, especially in a city like Bangalore, I think the travel being what it is, distance from the office is definitely a very key parameter that people look at measuring distance in terms of time taken, not in terms of actual distance. Yeah, in a market like that.
Absolutely.
Yeah, yeah,
Absolutely.
yeah.
Absolutely. And that's one of the key factors in, making that decision to invest.
Yeah, yeah, yeah. So I know that you guys prefer the mid-market segment. So would you say what would you say are the key factors that lead you guys to focus on this? You prefer investing in mid-market, mid segment deals, right? So can you throw some light as to why you guys prefer that segment?
Sure. So I think this mid-market segment typically is always, driven by end user demand. So
Right.
any project that caters to the mid-market segment
Mm-hmm.
typically will have 90% of its sales backed by home loans. So
Got it.
from our standpoint, it is easier to underwrite, these projects
Right.
on the back of the fact that 90% of the sales
Mm-hmm.
will have much more expected progress payments,
Got
meaning whenever those come due,
it.
those progress payments will come in. See, for
Mm-hmm.
any real estate projects, you will have to look at a combination of progress payment from customers
Mm-hmm.
and our component of working capital to finish construction.
Right.
So what we typically do is we basically underwrite a project in a manner where the combination of existing sales
Mm.
and our working capital will at least be sufficient to complete construction of the project and
Mm-hmm.
get to. So what risk we take is effectively the marketing risk of the
Mm.
developer being able to sell the remainder of the units, because
Right.
that will determine the return on our principal
Right.
and
Right.
the principal as well.
Right.
So, and what we believe is that given the pace of urbanization and
Mm.
the amount of migration that is happening into major cities,
Mm-hmm.
the demand for mid-market housing, given the fact that it's more end user centric and not investment centric,
Mm.
will never go out of fashion, and that is why we continue to prefer investing in mid-market housing.
Right, right, right. So we're also seeing robust uptake in the luxury segment. I think we heard about the project in Gurgaon, which was sold out in I think 72 hours after launch. I think they clocked around 600 crore worth of sales. So how about that segment? Do you have any thoughts on the, let's say, luxury and high income group segment, and what's driving what dynamics are driving those sales forward?
Sure. So I think we've definitely seen an uptick towards purchase of luxury houses across major cities.
Yeah.
This was driven largely by the need for larger homes
Okay.
post-COVID,
Right.
right? And it was, the usual work from home culture
Hmm.
triggered the need for a larger house to have a home office,
Right.
uh, et cetera, et cetera.
Hmm.
Uh, Obviously, COVID acted as a blessing in disguise
Hmm.
for the luxury home segment, which was
Yeah.
actually struggling
Right.
in a pre-COVID era where there were no takers,
Right.
right? Uh, as far as the future is concerned, with the marginal growth in interest rate
Hmm.
and prices, uh, notwithstanding the increase in ticket size as far as luxury homes is concerned, we believe there will be a healthy balance
Hmm.
between the mid-market segment and luxury segment,
Hmm.
going forward as far as distribution of sales is concerned.
Right, 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 right. Yeah, that's something quite unique because, like I said, the demand is so strong that not only, like you said, mid market, it's also, I think, the affordable segment, which was had the problem of excess inventory. I'm seeing like sales happening even in that segment, right? So this demand is actually across segments, and as we've seen the numbers of the listed players, I think all of them have reported record numbers like past 2 quarters, be it any of the listed names, a Godrej or a Shoba, a DLF, a Lotha. I think all these guys are reporting like record numbers quarter and quarter. So that bodes really well for the market, like you said, going ahead. But continuing on the same trend, so would you say that this inflation and the higher rate cycles as we're seeing at this point of time, so would you see it having any impact going forward on the demand side of the equation at all, Vimal?
So, if you look at the past 6 years, right, pre-COVID, residential real estate prices, as I mentioned earlier, grew negatively as far as inflation is concerned, right? Uh, if you look at the way the economy has performed, it's remained largely stable, right? And if you look at what the World Bank says currently, India is the least prone to recession amongst any country. At least the Western world. If you look at the economic indicators in terms of GST collections, which witnessed a 15% increase, UPI transactions, which actually witnessed a 50% increase. If you look at manufacturing PMI, which increased by 4%, and services PMI, which increased by 8%. I think these bode well as far as macroeconomic factors is concerned, and and the growth of the countries is concerned, and that always augurs well for purchase decisions, particularly as far as residential real estate is. Of course, the pause on the rate hike is expected to have a positive impact on the housing sector. We've seen the RBI in its monetary policy review, hike rates close to about 250 basis points. Since the beginning of 2020, we believe the pause, should have a positive impact in terms of at least, providing certainty as far as pricing or real estate is concerned, particularly, in terms of, giving some as far as concerned, some stability. Of course, it goes without saying that the interest rate cycle, we live in a globalized environment. So the movement in interest rate cycle as far as India is concerned is also dependent on how global interest rate cycles move. But we feel, based on our assessment, fairly positive. In terms of the performance of the broader economy and the home buyer sentiment overall, to have good bearing on the market momentum for the remainder of 2023 at least.
So, Vimal, did you guys also have any exposure towards the commercial side of things, or are you restricted only to residential? And maybe you could share, because obviously both go hand in hand, right? Because how about the commercial, segment? Because obviously that also has been doing extremely well. We're seeing large corporates, taking up more and more uptake of office space. So that again is a positive contributor to the residential segment. Would you see it that way?
Definitely. I think if you look at what happened to the office sector immediately post-COVID, it took a huge hit, right? Largely because of, the work from home practice that companies were forced to incorporate in order to ensure continuation of operations. And, later on the hybrid work culture, where, employees were only supposed to attend office for a certain, for certain days in the week. That obviously doesn't augur well for office absorption going forward, in terms of corporates to commit to space that they have, in a post-COVID era. Something they were pretty comfortable doing pre-COVID. Obviously, we believe that this work from home hybrid model is behind us. And we know all major companies are now asking their their employees to return to their offices full time. Right. And that is, we are witnessing that impact in absorption, coming back, in a big way. Right. We also see a lot of global offices starting their KPOs in India to run their back offices. Right. And that is also expected to create further positive impact in the demand for office space in India. Now, from our standpoint, we continue to remain, interested in evaluating income yielding assets, for sure. And we, believe that, both yields and cap rates, of income yielding office space will, continue to remain, attractive.
Right.
We continue to evaluate opportunities in this space. But to be honest, at this point in time, we are not invested in office space, but we have a quite positive view on on the office space story in India going forward. It goes without saying that the success of absorption in office space and the is a direct it's a direct parameter to showcase the growth in the economy, because companies require more office space because they want to hire more. Right.
Absolutely.
And they want to hire more because they believe in the growth of their business, and and it has a positive rub-off effect on the economy as well. And they have actually inched marginally upwards. Not compressed, thankfully. So that sort of is, obviously that is still, not helping totally, because lease rental discounting rates, have started inching above. And we believe that creates an opportunity for at least participants like us who want to, enter income yielding assets. Very attractive, cap.
So Vimal, we were talking about the commercial market. So as you rightly mentioned, both of the markets actually go hand in hand. So when there's a robust absorption in the commercial space, obviously the residential also sees increase in uptick in demand and so on and so forth. Have you guys also looked at the warehousing and logistics space, because there also is a large opportunity in terms of warehousing, industrial real estate, and so on and so forth?
I think we have. What typically happened post-COVID is that the way the cost of construction increased, there are reports which stated that the cost of construction, particularly based on the supply chain crisis, increased by close to about 20%. And in warehouse rents have moved in order to adjust for that inflation. So from that standpoint, and obviously cap rate expectations as far as both landowners are concerned and existing developers who own income yielding warehousing spaces are concerned, are still at the pre-COVID levels. But we believe there will be opportunities for us to participate in, because a disbalance is likely to get created again, similar to the income yielding office space. Lease rental discounting rates in warehousing spaces are also inching up. So at some point in time, we believe there will be a shift in cap rate expectations as far as warehousing spaces are concerned as well, both as far as landowners are concerned, who want to sort of do JDAs on their land, as well as existing warehouse owners are concerned.
Right. Yeah. So I think warehousing has the additional
interesting space.
Warehousing. I mean, in my view, the interesting thing about the warehousing and logistics is that the land also tends to appreciate and therefore add value to the portfolio, right? Because typically you're buying land on the outskirts, and therefore the probable capital appreciation on that parcel of land also will probably give some additional delta to the whole portfolio in addition to the rental yield that you're getting.
Absolutely, and that is where cap rate compression comes about. Right, but again, it will be a multitude of factors, which includes inflation as well as where the interest rate cycle is going. Typically in income yielding assets like warehousing, those have seem to have a larger bearing as far as your ability to extract compression, which is nothing but appreciation,
right?
In your land cost is concerned.
Got it. So, Vimal, now coming to your, let's talk about the Vimal Jangla's personal investing philosophy. So, where does Vimal Jangla invest? If you can give us some, insight into, what is your personal investment philosophy when it comes to you? Because obviously, business-wise, you're one of the best-known private equity real estate funds. But how about your personal investments? If you could share with the audience, it would be great.
So I'm all real estate, to be honest with you. I think it is better to invest in thing, that deeply understand well. It is very essential to time your entry and exit in asset classes if you actually want to earn money, right? If you're caught in a wrong cycle, chance of you losing money are seemingly high. So what I would suggest to anyone is to try and invest in asset classes that you know deeply of, and try and stay off asset classes which you don't have an inherent understanding of.
Right. Stick to your circle of competence, right? As Warren Buffett calls it. I think that's what he mentions. Yeah.
Exactly.
Yeah. And how about
absolutely.
Yeah.
Absolutely.
And which city, Vimal, would you pick if you were to make an investment, given that you have a bird's eye view of the entire, national scenario? Which city would you pick to invest?
So I think, I think all cities, like I mentioned to you, we don't focus on cities per se, we focus on micro markets. And that goes for me personally, as well as, in my capacity as a fund manager. So from that standpoint, we are more micro market focused rather than city focused. Right. So no preference that way. I think all cities, be it Bangalore, Pune, Mumbai in pockets, Hyderabad in certain pockets, Chennai in certain pockets, and particularly Noida, are doing really well. So I think anybody looking to invest should focus on the micro market rather than the city.
Right. Yeah. So with that, I think we've come to the end of our fireside chat, Vimal. And like I said, thank you so much. Really appreciate all the inputs that you have shared with the listeners and the audience. And hopefully, some of the insights that you gave will actually lead the audience to making better decisions, and certainly some food for thought. Like you said, if there are any fence sitters around, then I think they've been given sufficient data to sort of convince them to actually, go in there and buy before the rate cycle turns, or, make the most of the opportunity as it is right now. So, Vimal, thank you once again for logging on to our fireside chat at Propathon 2023. And we hope to, hear a lot more from WSB and its partners going forward to the next decade.
Thank you so much, Rahul. Thank you so much for having me here. It was a pleasure. Thanks a lot.
Yeah.
Bye.
Thanks, Vimal. Bye.